Hey everyone, and welcome to AI Explains ICT. So today, we are diving deep into a game-changing concept from Core Content, Month 8, Episode 2, the true 24-hour trading cycle. And look, this isn't just some minor detail. It's a massive shift in perspective that separates the pros from the rest. Seriously, you're going to want to grab a notebook for this one, because once you see it, you can't unsee it. It will change how you look at a chart forever. Let's get into it.
So, here's the game plan. First up, we're going to expose the critical flaw in how most traders look at the 24-hour day. Then, we'll define the exact 24-hour cycle the algorithm actually uses. After that, we'll zero in on the 4 most important time windows. Then we'll see it all click on a real chart, and finally, we'll wrap it all up with a new daily roadmap that you can start using right away.
Okay, let's get right into it. The main problem we need to solve is this. There's a huge disconnect between the 24-hour day you see on your charts and the one that the market's engine, the Interbank Price Delivery Algorithm, or IPDA, is actually running on.
This slide right here is the whole story in a nutshell. On the left, you've got the retail view. It's based on your broker's random server time, marked by those useless period separators. ICT calls this a classic telltale sign that you're looking at the market all wrong. On the right, that's where we want to be, the interbank view. It's not random, it's precise, it's structured. This is the lens we have to adopt if we want to find those high-probability setups.
So the big question is, how do we make that switch? Well, it's pretty simple actually. We just need to sync our watches to the algorithm's clock. We need to know the exact 24-hour cycle that IPDA uses to deliver price. And here it is. This is the big one, the IPDA True Day. It officially kicks off at midnight New York time, and its full 24-hour cycle wraps up at 3 p.m. New York time the following day. And just to be super clear, every single time we talk about from here on out is New York local time. It doesn't matter if it's daylight savings or not, the chart adjusts, so we adjust.
Okay, so you're probably thinking, why 3 p.m.? What's so special about that time? And that's a great question. It's not random at all. It's tied to the bond market close. When the bonds close, the influence of interest rates on currencies is pretty much done for the day. Plus, it makes sure our framework captures any big moves from something like a 2 p.m. FOMC announcement. All right, so we've got the big picture, that 24-hour cycle. Now for the fun part. We get to zoom in on the most important windows of the day. ICT calls these the kill zones for a reason. This is where the action happens.
First up, we have the Asian range. Think of this as the setup phase. It runs from 8 p.m. to midnight New York time. The market is usually just consolidating here, kind of building up energy for the big moves later on. And then London kicks in. This is where things get serious. Now you really need to lock this in because ICT is super specific about this. The London kill zone is from 1 a.m. to 5 a.m. New York time. Not 2 a.m., not 3 a.m. It's 1 to 5. A lot of people get that wrong, but this is the real window. So why is this window so incredibly important? It's simple. This is often where the algorithm literally creates the high or the low for the entire 24-hour day. The whole directional bias can get locked in right here in these 4 hours. Okay, after the London session does its thing, our focus shifts to the New York kill zone. That's from 7 a.m. to 10 a.m. This is prime hunting ground. This is the window where ICT is actively looking for his setups, usually to piggyback on whatever move London just created.
You might have noticed there's a gap there between 5 a.m. and 7 a.m. That's not a mistake. That's what we call the London lunge. Price tends to go pretty quiet here, so it's a great time to just sit on your hands, be patient, and wait for the New York volume to come in.
And rounding out our key windows, we have the London close kill zone from 10 a.m. to noon. This is our last shot for a high probability move. You'll often see a late day reversal here, or maybe one last push that really caps off the daily range. Okay, that's a lot of theory, a lot of times and zones. But what does it actually look like on a chart? Let's switch over and see how this framework takes what looks like total chaos and turns it into something that makes perfect sense.
Okay, so look at this. This is the before picture. It's the standard retail view, right? You've just got these simple lines separating the days based on, who knows what, your broker's server time. It's messy. There's no real rhyme or reason to it.
And now, look at this. This is the exact same chart, but with our IPDA framework laid right on top. All of a sudden, everything just snaps into place. You see the structure, right?
Those major turning points? They're not random at all. They're lining up beautifully with the time windows we just laid out.
Let's get specific here, because this is just amazing. Take a look. The high of the day, where does it form? Bam! Right at 5 a.m., the very end of the London kill zone. And then, get this, a critical short-term low forms precisely at 8:20 a.m., the CME open, smack in the middle of our New York window. And the absolute low of the day? It's printed during the London close kill zone. You can't make this stuff up. This is a clockwork algorithm, plain and simple.
Okay, so let's pull all of this together into one simple, actionable roadmap that you can use every single day. This is the complete time framework for the IPD True Day.
All right, this slide right here, this is your new cheat sheet, your master clock. This lays out the entire IPDA schedule crystal clear, from the midnight open through each of the kill zones, all the way to the 3 p.m. close. And remember, it's all based on New York time. I would seriously recommend you pause and take a screenshot of this. Put it on your desktop. This is your guide.
So, that really brings us to the key takeaway. This isn't just some interesting theory to know. It's a tool. Now that you can actually see the clock that the algorithm is running on, how is that going to change the way you trade? How will you approach your charts differently tomorrow?
Hey, if this video helped clear things up and gave you that aha moment, do me a favor and hit the like button. It really does help out. And of course, subscribe for more breakdowns of ICT's core concepts. If you have any questions at all, just drop them in the comments below. A human will definitely get back to you. Until next time, good luck and safe trading.